let's get straight into it. Start from the path, as we always do, just to give you the core concepts, and then we'll take them into the charts. And yes, let's say price is trending to the upside, and we take out the high, we have a break of structure. That break of structure, simply put, that break of structure is going to leave behind what? A supply zone. Can you take a trade from the supply zone? Yes. Then we'll have a new break of structure. Where did the new break of structure come from? A supply zone. A supply zone. Now, you can capitalize on all of these moves just based on structure alone, on order flow alone. So understanding the power of order flow is essentially all you really need to be able to trade in alignment with the banks. Now, of course, you have to understand the concepts of supply and demand to align it with order flow, and then you want to add yourself liquidity inducements to make sure you're staying out of those positions that are essentially liquidity. And you can literally short number one, take out the lows, short two, short three, you get the picture, right? And then short again. Now, let's show you that essentially in the charts, right? Here we are, GU on the daily time frame. Very clear to see we are shifting order flow. The highs have been taken, but they haven't been taken with a clear break of structure. Instead, they've been taken with a liquidation. Now, that is a very clear point. If highs get liquidated, that goes to show us that it wanted to induce more buyers, and in actuality, there wasn't enough buying pressure to take out the sellers. So where can we expect price to go? Well, to the downside. We had sell side liquidity down here, so liquidity to take, and these were lows. Once we have the break of structure, price revisits the highs, fails to put in a new low, play price out, price goes and puts in a new low. So now we've had another break of structure. Now, just as we explained in the previous session, a break of structure to the downside, all we have to understand is where did that break of structure come from? Here is our supply zone, the origin. Here is our lower time frame built up liquidity. Very simple, right? You can take your short in and around this zone. If you want to wait for the lower time frames, as of course we do, if we just zoom out, you can see that GU is overall bearish. We've tapped into a high time frame POI. So essentially at some point or another, these lows are going to get ran, and there's going to be some huge trades. Allow yourself just to trade in alignment with the trend. Let price play out to how it's supposed to, and get involved. It's very easy if you want to apply like this. Of course, you understand already, we trade on the lower time frames. Inside of our course of mentorship, everything is based off the lower time frames, 4 hour, 15 minute, 1 minute entries. So we are able to capitalize on those big, juicy risk to reward trades. Position number one gets tagged, starts running immediately into profit, and takes out the lows. Now, we can again get ourselves back involved. We have number one, and we have entry possibility numero uno, right? Allow one of them to play out. Okay, so the first one taken out, probability, right? You're never going to know exactly which is the one, probability. So number two gets tagged in. Number two starts melting. Well, what can we see inside of here? So we've had the reaction back into the origin, which a lot of the times is the level, especially on GU. Price likes to come back to the origin because this is just inducement liquidity. Now we've had a change of character. Where from? Supply zone. Can you scale in? Yes, absolutely, because there are now more sellers than there are buyers. There is more supply than there is demand. Where did that supply kick into the market? Here. So here's a new opportunity to get in on your already two positions. And this is just simply put, trading in alignment with the banks, right? You are literally trading with the trend. Price comes back up once again. Tags in, takes lows. Okay, can you get back involved? Let's see. Who knows? Okay, and then we see essentially the huge sell-off to the downside. Now, you might ask, well, where do we get in now? Because price has had the heavy sell-off. I mean, structure broke here, so there was this level, but now we have this level right here. So one way I would be looking at it is this is all built up liquidity. Does that mean it has to be ran? No, it doesn't, right? So it's possible then that price could come in and just take this level. Well, let's just wait and see instead of putting orders on, because we already know that this area right here has liquidity. And then again, it doesn't need to come all the way back up to the top. Price could just come down to these levels. Price has now had somewhat of a change of character on the daily time frame. Price could come for a level of pullback. Okay, now it's taken out the lows. Now it's taken out the lows. Can we get back involved? Well, why not? Right? Cover the highs. See how that one plays out. And that is literally live price action right now. So this, all of this RR has been available on GU this whole time. So how to actually capitalize on them? Well, if you actually go ahead and look into it, it's no different to what I already told you. Highs liquidated, we had a shift, then we had a break of structure, then we had a new break of structure, and all we were doing, exactly how we explained on the downside, break of structure down, getting in, break of structure down, getting in, change of character, getting in, break of structure. Right, it's all we showed when we came down here. Higher highs, higher highs, shift, entry, entry. Why entry here? Because for the most part, early sellers are going to be trying to get involved here. And that is the concept of liquidity. Straight reaction out. New position. Put in. Entry. Take out lows. If you look at that and you understand that highs were taken out, liquidity, liquidation event, then the lows get taken out, so order flow has shifted, meaning the bank's intention is to take price now to the downside. There's opportunity number one to get involved in the market, and then the lows go again, leaves a level of liquidity, takes that liquidity from the supply level, continues down, you get in again and again, right? All we're doing is trading structure. All we're doing here is trading the flow of orders. Now, inside of our mastermind mentorship, we go deeper into the price action on the lower time frames inside of certain levels to get those huge risk to reward trades. Like this is a 107 pip stop loss. We don't trade at that big of a stop loss, but the fractal nature of the market allows you to get involved on any time frame as long as you understand what is happening on the macro. And that is our higher time frame perception. As long as you have a very detailed higher time frame perception, you know what's going to happen in the markets. You allow it to play out and you get involved on confirmations on the lower time frames to avoid making a lot of mistakes. With that being said, guys, I'm going to wrap up this video there. Hope you guys did enjoy the video. If you did enjoy the video, go ahead and hit that like button and do subscribe to the channel if you want to see more related content. Thank you guys for watching, and I'll see you in